The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3. You can catch my episodes on my website, themainstreetcode.com, or Apple or Spotify if you happen to miss them, or go to the YouTube channel on the Main Street Code and catch past episodes there. When we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors, attorneys, accountants across the United States with insurance planning, and we help you with any of your insurance needs, whether it be life insurance, long-term care, disability, or annuities. And we're experts in all these areas, and we are completely non-biased and completely independent, representing over 30 different insurance companies. So we provide solutions that fit you, not product. We give you solutions that fit you, not product that we try and make that fit you, if that makes sense. So everybody has their own situation and their own needs, and they may need different things, and that's what we try and do, is customize everything to work with you. The other thing we do quite a bit is we work with various accountants and attorneys in particular that request our information in a variety of issues. Today, I'd like to talk about long-term care, which I've talked about many times in the past. Over 70% of us will need some sort of care. So if you're in denial that you're not going to need care, you're wrong. Everybody's, it won't happen to me. And the problem with addressing this issue is everybody waits until they need it. That's like the worst thing in the world, is to wait until you need it, because then you can't get it. Then you can't get the protection you need. So, and it's common, we don't think about these things on a daily basis unless it impacts our family directly, and then we realize, maybe I should look into this. You got to look into it. So, long-term care insurance is something that has evolved over time, because there used to be a lot more long-term care insurance purchased and sold. And the insurance companies at the time really didn't realize the expense. The insurance companies lost the one gamble that they had, was long-term care. They really didn't project how much people were actually going to use it. And of course, life expectancy has changed over time. We now can treat heart conditions and diabetes and things. If properly cared for, we can extend our lives really forever. If we find out things early. They didn't anticipate that. They anticipated that really you'd only need this kind of care for 2 or 3 years. And the other big thing is cognitive impairment is over half the claims today. And here's some of the common misbeliefs. It's not because I have cancer necessarily. I have Alzheimer's. It's a big deal. It's a common misconception is that is because of cancer or because of, stomach damage or, strokes. But mental and cognitive is right up there. And those claims can last 14 years. And even strokes people can survive for years because we've done so much work with the heart. So long-term care carriers really underestimated the usage, and we had about 10 or 15 carriers 30 years ago. You really are down to 2 or 3 that offer a pure long-term care insurance. Because of that, so the costs have gotten higher, everything's gotten crazy, but there are other solutions. There are other ways of doing it. There are legal things you can do to secure yourself that you'll be on Medicaid, which requires you impoverishing yourself, but there's definitely some legal things you can do. And there's other insurances that have adopted long-term care plans. So a lot of it has gone to what you might call a hybrid plan, which is really life insurance with a long-term care rider. And I really want to get into depth on this today because there's a lot of miscommunication out there about these type of policies. A pure life carrier with a long-term care rider, and there's a lot more of them outside New York than there are in New York. There's really three companies that really have a good, what I call, rider. The rider itself will pay if you need 2 out of 6 things of activities of daily living, like a traditional long-term care policy will. That could be bathing, it could be eating, it could be transporting oneself. There's 6 qualifications for that. You need to meet 2 of them, and the doctor needs to verify that. Now, with a long-term care rider on a life policy, the truly good ones, and the language is different from contract to contract, so you really got to know what you're doing. It may be all good, I got this now, but what's really important is at claim time, who's going to pay my claim and who isn't going to pay my claim. That's the key. So you really want to make sure that you're with a knowledgeable person who really understands this. Now, the way the long-term care riders work is they prepay the death benefit of the life insurance policy. So if I took out a policy for $1 million or $500,000, that if I never needed it, the death benefit would go to my beneficiary. But if I needed long-term care services, and let's say I needed, $100,000 or $200,000, that would come directly from my death benefit, dollar for dollar. So, for instance, if I bought a $500,000 policy and everything was great and I'm fine and I don't need it and it's going along, and all of a sudden I hit 75, 80, and oh boy, I really need services. Well, I have this pool of money, this $500,000, that I can prepay to myself to take care of me. Now, some people who are very wealthy today, and unfortunately the insurance industry is partly to blame, saying, well, you know what, I have enough to cover it myself. Well, you know what? The expenses coming out of your pocket, sometimes the biggest asset you have is your IRA or 401k. You take that money out, it's taxable to you, and it can no longer be left behind. And this is money and assets that are growing, that are in investments, hopefully, that all of a sudden I'm taking out of my investment pool and spending on me, and will not be left to my kids, and or could create a major tax situation. So even if you're wealthy, you need to consider some sort of coverage. These hybrids are a good option because they also, if you don't need it, you have it, you don't lose it. But when they came out with these hybrids, some of them came out with a new definition called a chronic care definition. So there's a long-term care rider and there's a chronic care rider. And a lot of insurance carriers kind of confused it, and the agents that were selling it also repeated things that they thought were the right thing for the clients, but are not. The chronic rider is not the same as a long-term care rider. And here's the big difference. With the chronic illness riders, many of them, you need to have a permanent situation. So that's a big deal. That it has to be permanent so that you can't get better, and we're going to give you that benefit. So that limits a great deal of people, because then it goes into their underwriting pool and says, hey, we don't think this is permanent. We think you're going to get better from this condition, and therefore we're not going to give a claim. Secondly, Many of them don't even charge on the front end to buy this rider. They do it on the back end after they underwrite you. So they may not give you, let's say you have a $500,000 policy, they may only give you $100,000 in chronic care benefit, and they charge you for that at time that you're paying, so that your death benefit could be depleted tremendously or eliminated by using that care. So it's not the same thing as a pure long-term care rider. And I caution you to really know before you buy, and know somebody who really understands the differences. There are big differences between chronic care and long-term care in the definitions. And in every insurance policy you buy, there are differences. It's not just price. There are differences in when you can claim, how you can claim, and everything else. And you need to be informed before you purchase and make these decisions. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you want to get a hold of me and ask questions about this, I'm at 631-647-4694. That's 631-647-4694. I'd love to hear your questions and comments. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you are just coming back to me or you missed this before the break, we were talking about long-term care insurance, and more particularly, different ways of protecting yourself against this eventual financial and emotional time when you need long-term care protection, which is not able to perform 2 out of 6 duties of activities of daily living. That's what long-term care is. And if anybody just got on Medicare or anything else and is applying for Medicare insurance, one of the things it says clearly on your Medicare insurance is, we do not cover long-term care. This is medical insurance. We do not cover long-term care needs. So this is not covered by health insurance. Get that out of your head. Oh, my health insurance is going to take care of me. Medicare is going to take care of me. Absolutely not. It says it right as anybody who's going through a Medicare application. And by the way, it is Medicare season, and I am not a Medicare expert, but you need to know the difference between an Advantage plan and a supplement. And I do want to go through that really quickly, too, because I think that's important. When you're turning 65 or when you're at that age, there's a lot of decisions to be made that can be very dangerous and very important. The Medicare Advantage plans, for a lot of people, are terrific. A lot of times they don't cost anything, but you're limited to a particular doctor pool. And the supplement plans are different. You can really go to any doctor. You have to pay up front. And the Medicare Advantage plans will probably have higher copays than the supplement does. But the supplement, you have to pay up front. Why is this important? If you have anything complicated, and you may not have it today, but you may run into a situation, whether it's maybe you have a diagnosis for prostate cancer, whatever it is, and you're in an Advantage plan, from my experience, and you're limited to a particular doctor pool, it can be problematic. Or if you have something complicated, like an autoimmune or something, and you need to see a lot of doctors, it may be difficult to get appointments. It may be difficult to have a guide map of who's handling your care. I personally found that I like concierge medicine, and I like the idea of a supplement. Okay, the supplement gives me freedom to go to any doctor I want, any specialist I want, and I also complement my own personal care with a hybrid kind of concierge service, which a lot of people don't talk about, which is I pay this company a lump sum of money a year, but the advantage of using like a concierge service, you have a personal doctor. You need something, he's got all your records. He gets all the doctors online. If you need somebody to make an appointment, it's a shout out to them. I'm personally going through a little something now, and I got to vouch for this is why I do it. So that's a big consideration. It's not about cost all the time. Everybody wants to focus on how much things cost. It's not the initial cost. Sometimes it's the back end costs. And that's why I talked about long-term care riders and the other riders, the chronic illness riders. A lot of salespeople are out there selling this chronic illness rider like it's a long-term care rider. It is not. And if you have a salesman or a person or an agent who's telling you this is your long-term care plan and you're convinced, okay, I'm covered, you're not. So if you got a question on that, call me. If the agent has a question, call me. I'm happy to go through it and go through a whole dissertation why that's different. And I think it's so important to have the right coverage that, again, you really need to know what you're buying. And life insurance, long-term care insurance, disability insurance, the reason I don't work with a career company is because every contract has different language in it. And the language is important. It's not important up front. If I look at this one and this is cheaper, then that one's cheaper, then this is cheaper. That's not always the best thing. I mean, when you go to buy a car, you could buy, a Volkswagen, you could buy a Hyundai, you could buy a Mercedes, you could buy... What's the difference? They all drive somewhere. They all have different features and benefits. And the most important thing, again, I can't say it enough, is you want a company that's going to be there for you when you have a problem or you need to make a claim. Even as simple as saying, I hate to say it, but I'm going through a lot of people and working with people on their death claim that, A, they don't know the agent. I've seen 5 or 6 contracts in the past with companies they don't know where it is. The companies are resistant and saying, oh, well, I'm not going to pay this claim because, he lied on his application or his medical or this, and just give you a hard time. Or they can't find the policy, which by law they have to have. You don't have a copy of your policy, so they want to send a check to the estate. They'll put delays in there. This is why you work with professionals, not buy stuff online or just buy on price. You just can't, okay? Even if it's a representative who represents a couple different companies and say, this one's cheapest, therefore it's the best. Not always the case. Usually not the case. I would say almost always not the case. Because servicing a contract and having somebody who's going to be there with you to help you in a claims process, whether it's a property and casualty claim, a life claim, a long-term care claim, you need that person who represents you when it's time for a claim or there's a problem. If you don't have that and you're buying off the internet or just buying off the street and here's my cheapest thing, okay, I got that, I'm covered. You're not covered, okay? It's you put a little thing on it and says, okay, all's good, life is good. Woof, I don't have to worry about that thing. I bought some life insurance. You hear these people in line, I bought this thing. Okay, I'm all covered, it's all good. Well, it's all good until it isn't, right? All good till it ain't. So, I highly recommend that you meet with a professional. Now, not just insurance. Let's talk about accountants. There are a lot of great accountants out there. There are some that aren't so good. If you only talk to your accountant and you have a small business once a year and you're rushing to get your numbers in, like so many people do, that's not an accountant that you want to work with. You need to have a sounding board on a regular basis on moves you have to make as far as your taxes, as far as your insurance. You can't have just put everything in once a year and have somebody not give you any advice and think they're a good accountant. And there's a problem. Because I would say, by majority, most people do everything last minute, give their accountants last minute. The accountants are always crushed. They don't have time to go through stuff. So it's the whole year of planning that's important. And many accountants are overburdened because they get crushed. And then many accountants have joined big accounting firms, which don't want to listen to the little guy because they can't. So you have a really thing where you need that personal care. We work with a lot of accountants. And that personal care is important, not just for your accounting, but for your insurance and for your legal work. All these things come into play when you're doing financial planning, and we like to do that. This week, by the way, I started a new club. It's called Club 180. I looked at my building, which is on 180 East Main Street in Patchogue, and I realized I have an accountant, I have an attorney, I have a property and casualty agency. I have all these wonderful resources right in my building, and I got everybody together to talk about it. How do we help one another? How do we help our clients best? We can help them best by coming together and working together so that we all have a plan for you that works for your family. Thank you. Have a great day. Good luck, Mets. Go Mets. Go Yankees. Go Knicks. Very exciting time to be here in New York. Thank you. You have a wonderful day. Have a terrific weekend. You've been listening to the Main Street Code for Financial Success. If you'd like to get a hold of me, Neil Himmelstein, I'm at 631-647-4694 or visit my website at themainstreetcode.com. Have a great weekend, everybody.